What is going on, investors? Hopefully you guys are having a great day out there. That is right. It is Friday, and you know what that means. It is time for the FANG Stock Recap Show, where we recap all the FANG stocks, all the news that happened this week, also some of the price action. We saw these stocks take a nice little dip during the middle of the week, but buyers stepped in later in the week, and we'll talk about that. And hey, I might have actually bought the dip on a couple of these names as well. I don't typically talk about buying stocks. I don't buy stocks a lot of the time, but this week I did step in here and buy that. I'll talk about which ones I bought now. Let's not waste any more time. Let's kick things off with Facebook. Started the week at 311, melted down to about 298, but ended the week strong at $315 per share. Now, the former president, Donald Trump, is in talks with other small social media contenders as he seeks a new platform. So we talked about, I think it was last week, Facebook's oversight board upheld the Trump suspension, but said at some point Facebook needs to decide, is this a permanent suspension or is it one where he is going to be allowed to come back? So Trump is not wasting any time. We talked about, I think on a previous show, he was rumored to potentially start his own social media company. We talked about how that would be difficult. That number one, he had the marketing and he had the ability to drive eyeballs, but how is he going to host that? Okay, with Amazon, Google, Microsoft, and maybe Facebook to a certain degree, controlling like server space. Okay, these companies don't like Donald Trump. They weren't going to allow him to set up a competing site and use their servers. It was going to be difficult. So he's in talks with CloutHub. In fact, the CEO met with President Trump at his estate last month. There's a couple other ones, including FreeSpace and Skylab. I'll be honest with you, I've never heard of any of these. So it'll be interesting if this is a play for some of these smaller upstart social media sites. Can they attract, I mean, Trump is obviously the former president, but he's kind of like his own, like a celebrity to a certain degree. Will that work? I think this is interesting, okay? And here's the deal, is President Trump is not really interested in equity of the company. He wants cash, baby. He wants cash up front, almost like a licensing fee. So it'll be interesting. This is just interesting. Okay, first of all, a lot of you watching, you're either are a fan of Trump or you don't like him. People tend to be on either side of this. I'll have you put that aside right now and put on kind of your investor hat and say, well, this is interesting because if Trump can prove that an upstart social media site can throw a couple dollar bills at a large celebrity and have them come over and bring an audience over there, I'm not saying that a company is going to compete with Facebook or Twitter or something like that, but it'll be interesting if he can help grow market share just by paying people to come over there. So, you know, other celebrities, obviously this has been tried in the past with Twitch and some other streaming sites have tried this in the past. Obviously Joe Rogan switching to Spotify is an example of this. So it'll be interesting if this works for social media. And obviously Trump is one of the more polarizing figures on social media, but also, you know, let's face it, a mega draw when it comes to this stuff. So we'll see what happens there. I'm interested to see what materializes there in the coming weeks. Now, a group of 44 attorney generals urged Facebook to abandon the Instagram Kids plan. So we talked about this a couple weeks ago. They wanted Facebook wants to start an Instagram for children under 13. Tell you what, I'm not going to tell you whether this is a good idea or not. What I will say is from just a respect perspective, I actually respect Mark Zuckerberg for being this bold, okay? For wanting to start an Instagram for children under 13. He had to have known this was going to get tons of blowback, not necessarily from AGs, but from parents and things like that. But he's still willing to do that, okay? He's still willing to go forward despite the negative press. I like that. I actually like executives that are willing to push the envelope a little bit, okay? So whether or not this is a good idea or not, I have children. I don't think I'd let them use it, but that's neither here nor there. Now, Alphabet and Facebook were downgraded at Citi amid high ad expectations. What was interesting was Citi was just basically moving away any large cap ad-centric internet stock, which is basically Alphabet and Facebook. So I thought that was interesting that they thought maybe we've seen maybe a peaking in ads. We've also are coming up on tough comps. There was a lot of online advertising that got really pushed forward because, you know, look, this time last year, everybody was online. And so there was a lot of ads being pumped in there. So we'll see what happens there. Moving on to Apple, start of the week at 128, basically flat. End of the week about 127, but you had a chance here in the low 120s to grab this, and spoiler alert, I did. I grabbed this one. I'll show you on the price chart what I saw in this one. Now, a lot of stuff going on with Apple, with this Apple and Epic. Epic is the maker of the popular Fortnite video game, and they're wrapped up in this trial where Fortnite wants to allow users to use their own checkout system for in-app purchases. So they basically avoid this 30% commission. Basically, every dollar that flows through the Apple App Store, Apple collects 30 cents of that. And Epic is saying that's anti-competitive, it's unfair, that type of thing. Interesting, during some testimony that the judge asked an expert witness if Apple removing the rule of the 30% commission would solve the complaints of Epic and other developers. So it's interesting that the judge asked this. I'm not an attorney. I don't follow a lot of court cases, but I will say judges ask a lot of things. It doesn't necessarily mean that's how they're going to rule, but it is interesting that the judge's line of thought was like, hey, if we do away with this 30% commission, will this basically allow you guys to work together again? Thought that was interesting. Obviously, any elimination of this 30% commission would have, in my opinion, it's probably not priced into the stock right now and probably would have a negative impact on the stock itself. Now, more on the trial. What I thought this was interesting. So there was a data breach that the Apple developers and the company did not disclose that infected 128 million iPhones. It was through, this goes back to all the way to the iPhone 6, which was many years ago. What was interesting is that Apple is arguing in court that they have to maintain their app store and maintain it and charge a 30% fee to maintain security. But this breach shows that this breach actually came through the App Store. And so Epic is arguing, look, they had 128 million infected phones. Their app store is not necessarily, protecting anybody. Not only that, it was shown that Apple did not send an email out to people on this. This is something that people were not notified of. That is interesting in itself as well. Now, Cathie Wood's ARK sheds a third of Apple's holdings in its flagship fund, which has been slumping. I was actually on the Trader Merlin show on Wednesday. I'll put a link to that in the description below. We discussed all about Cathie Wood's ARK fund, and this is one of the reasons why I do not invest in ARKK, is because she sells companies like Apple and then goes and buys companies like Skills, which basically makes money because of the iPhone, essentially, okay? So I don't like shedding high-quality companies to go and buying speculative companies. I don't need to pay somebody for that. But look, the performance of this fund over the long term has been just extraordinary. But more recently, it has been slumping, and it has not been beating the general average of the S&P 500, and let alone the NASDAQ as well. We'll see what happens going forward. Moving on to Netflix, start of the week at $4.98, end of the week at $4.93, is in the bottom of a zone. When we talk about Netflix here, when we get to the price chart, we'll talk about how it is a buying opportunity for Netflix more than likely. Now, Netflix rolled out a streaming movie hit, so they're doing a movie per week over there at Netflix. Netflix's bread and butter are these series, whether it's like a Grey's Anatomy that's, like a long series that used to be on, I think that was maybe on NBC or NCIS or Criminal Minds, things like that. They acquire the rights to these and they get tons and tons of people to just binge watch it. They also obviously have their own original series and things like that, but they are, focusing still on movies as well, which was their bread and butter back, back when it first started, back when I was actually in college. So they are doing a movie per week, and it's showing you that they have popularity still in that space as well. Moving on to Google, started the week at 2,313, ended at 2,000, we'll call that $279 in the after, if you count the after hours. This thing dipped down to about 2,200. This is the first misstep in the upward trajectory of Google shares. So we'll talk about that as well. Not a ton of news coming out of Google. Now, moving on to Microsoft. Started the week at 249, ended the week at 248. This one, though, dipped into the low 240s. And that was an opportunity that I took. I am underweight Microsoft. Out of all these stocks, I do not own Netflix. And I'm underweight Microsoft and Tesla. And so I took the opportunity to jump in there and buy a couple shares of Microsoft. We'll take a look at that when we get over to the price chart. New Microsoft bull sees a 50% upside. That made me feel good about my shares of the most important software company. So Rosenblatt is initiating a buy rating on Microsoft with a 301 price target. Again, they're sitting at about $250 per share right now. Moving on to Tesla, lots of news coming out of the EV maker. Started the week at 655. This thing is in correction mode, okay? Over the last 5 days, just down 13%. Last month, though, this thing is down a solid 20-25%. This is in correction territory. When we get over to the stock chart on Tesla, we'll talk about, is this a buying opportunity? Now, Dogecoin raced higher again after Elon. Elon obviously had his Saturday Night Live thing. He called Dogecoin a hustle. It went down. Then he tweeted later in the week that maybe they're thinking about accepting it at Tesla and that he's working with the developers. Then, as we'll talk about here in a minute, he kind of bashed on Bitcoin and kind of the environmental impact that it had on there. Elon's, he's going off. It's one of the reasons why Tesla is such a recognizable company, and I think they get the valuation that they get is because Elon Musk is not only famous, but he's a little bit like, he's even more so than Mark Zuckerberg. He's willing to, poke the bear, that type of thing. I like that, okay? Now, can you cross a bridge? Can you go over the line? Sure, Elon Musk probably has. Someone like Mark Zuckerberg probably has. Someone like former President Trump definitely has, okay? But there is something to that, okay? There is an effectiveness, and I think as an investor, if you learn to appreciate it a little bit, there can be some profits there. Now, it hasn't been working out this week, as we'll talk about in a minute. Tesla shares are sliding, but Tesla is looking to secure a new battery supply deal in China. It appears that supply is a little tight, but they are securing a partnership for Q3 production as it ramps up in China for the popular EVs over there. Now, Tesla suspended their Bitcoin transaction. This sent Bitcoin down quite a bit. It was up in the mid 50s, and this thing sent it off. And it's concern over energy use. Now, we're not going to get into on today's program this. Maybe on our Saturday show tomorrow, be sure to tune in. We'll talk more about Dogecoin. We'll talk more about Coinbase. We'll talk about Bitcoin. Probably talk a little bit more about Tesla, maybe a little bit about Cathie Wood and those types of things. Our Saturday weekend show is one where we talk about a broader range of things. Now, Tesla is tipped for a strong Q2 with healthy China demand. So there's obviously production issues across the industry, but Tesla is off to a strong start in Q2, on track to comfortably top 200,000 deliveries in the quarter, despite chip shortage, battery issues, and stuff like that. Now, what I will say is I did not buy Tesla stock this week, but I did pre-order the Tesla Cybertruck. Now, I doubt I'll get it. I ordered one of the ones that are supposed to be going into like the dual motor one that's supposed to be in production by the end of the year. But I would guess it's probably going to be at least 2 years. I'm probably going to be up on the lease of my current car by the time that one comes in. Here's the deal, though, is Lucid Motors CEO won't commit to 20,000. Okay, we're talking about Tesla delivering 200,000 vehicles in a quarter. This Lucid Motors is not even willing to commit to 20,000 electric cars in 2022. That's next year. So Elon Musk said it probably best on Twitter, and I don't remember the exact quote off the top of my head, but he said concepts are easy. Developing cars, getting concepts for one, getting people marketing it, I think is pretty easy. actually production of these things and rolling them out is actually very, very difficult. And we see evidence of that in the fact that Ford, GM, Mercedes, Audi, Mercedes and Audi in particular have had concept EVs for a while, and they're struggling to get them out. Okay, those are two very, very nice brands, very, very nice cars. They can't even get it out, let alone someone like Lucid Air or some of these more speculative EV stocks. This is why also when I see the delivery numbers from a NIO, from a Li Auto, companies like that in China, I am very, very impressed. Okay, I haven't invested in any of those. I have not invested in any of those companies, but I've been very impressed with their numbers. Now, moving over to the stock charts. We'll come out back to Google here in a second. We'll kick things off with Facebook. Not a lot to see here. Okay, Facebook, some of these stocks did what I thought they would do. We talked about on last week's show where we consolidated sideways with Facebook for a long time. Okay, several months, almost half a year, we went sideways. Okay, to a certain degree. Okay, from $255 up to, we'll call it about $300 on this one. We went sideways, basically $50. And after this mega run that it made, what I thought could happen is now we're starting a new consolidation zone, okay? And with Facebook, it appears it's in that 300 range up to 325, maybe as high as 330. That held this week with Facebook. So all things being considered, that's what I'm expecting with Facebook. We could walk back up here to 320, 325, 330. I would expect sellers to step in here as you approach this 330. Any pullback back down to 300 or just under that can be a buying opportunity if you want to get into Facebook. Now, Apple didn't quite hold the upper end of what we thought. Okay, I thought this thing could hang out above 130, but once you broke 130, this thing came down. I bought it down here in the 124, 125 range. Okay, so I did pick up just a small amount. Okay, because we've broken trend, we've broken a critical area, the odds of us hitting 120 aren't that bad, okay? And coming down here, you break 120, 116's in play, 112's in play, 110. I am not convinced we don't retest the bottom areas here with Apple. The thing is, though, Apple has that $90 billion buyback. And I think it's even more. I think that's what they added to it. So they have even more than that. So I don't know how much downward pressure you will see in these shares because the company theoretically can be in there buying these up. Now, Amazon broke, I thought, and I'm always on here patting myself on the back when I'm right, which is not all the time. And in fact, it might actually be rare. But when I'm wrong, I try to talk about it here on the show as well. I thought we could hold this 3250 range, and we'd trade up here with Amazon from 3250 up to 3500 and change, actually. I thought we could hold it. We didn't, but we came down here, and we're hugging this moving average that is turning positive. It could be that the new trading range with Amazon is 3,100 back up to 3,500. Okay, a dip down here to 3,100 could be a buying opportunity. I think absolutely if you're in these stocks more for the shorter term or trying to generate income, trying to trade, everybody has their own strategy. Okay, back up here to 3,500, 3,550. That's a sell, in my opinion. So it could be that I thought the range would be a little bit higher with Amazon. The report was really good. The momentum behind the business was really good. But the stock, once it hit 3,500, it came all the way down here pretty darn close to 3,000. So we'll wait and see next week going into Amazon. Now, Netflix is pulled into the bottom of the zone. This zone right here between 470 and 490, this has been a buying opportunity for Netflix since last July, for almost a year. The stock hits 469, 470, and it has bounced and it has rallied and in some cases gone up over $120 per share, all the way back up here to 590 and above. Down here in this range, if you want to buy Netflix, Okay. And again, you have to understand when you buy at the bottom of a range, if you break that bottom level, well, look out below. This thing can really break trend and really go down. Okay. You can look at Palantir. You can look at some other stocks out there and maybe even Tesla to a certain degree as well. Once you break the lower end of support, sellers tend to step in because everybody's looking at this 470 level with Netflix. Okay. This 470 to 490 level is a buying opportunity if you want to get into Netflix. Now, Google for months has just been consistently staircasing up. We saw the very, very first, this is probably one of the first times in months, this thing actually broke down below its upper channel and it dipped down there just briefly down to about $2,200 per share and kind of snapped back up to about $2,280. I would not be convinced if we don't come back down there again. I think it appears to me sellers are stepping in with Google. Now, we could throw everything out the window because Google has been surprising week after week. This thing could gap up to $24.50. So I'm not selling my shares. I'm not even thinking about it. But a pullback between 2000 and 21, we'll call it 2150, just to keep the numbers round. That, in my opinion, if you are just dying to get into Google, can be a buying opportunity. It also will understand that the trend of kind of staircasing up, sideways consolidation, staircasing up, sideways consolidation will have broken at that point. So you just might want to be careful a little bit. Now, the other stock that I bought the dip on was Microsoft. So I'll walk you through what I was seeing. Okay, I was seeing the market sell off. I said, okay, I want to buy this dip. I don't want to I have some money in my IRA account. I constantly deposit in there. I have, I think, a slightly over 5% cash in there now, which is about where I like it, but I don't mind putting that when a good stock goes, what I think is on sale. I don't mind stepping in there. And so I'll show you what I saw with Microsoft. Okay, so we had this downtrend. Once we broke 245 on this one, that was a key area of support, but we had this big cluster of price action here, and it was acting as support here. I didn't get in the dead low. The dead low was in the 230s with this one. I waited for a reversal. I probably bought somewhere on this green candle here in the low 240s with Microsoft, and it turned out to be okay, at least in the shorter term. This one's back up above our support here at 246. We're back up here at 249. It wouldn't surprise me if we get sideways consolidation. Again, this is not factoring in macro stuff, jobs reports that are bad, inflation numbers that are bad, stuff that happens maybe in Washington that is perceived to be bad, those types of things. But I think we could bounce up and down here with Microsoft. We could come back up here to 260. If we don't break 260, we're probably coming back down to 250, that type of thing. But it's above the range where we were before. Okay, so we'll see if that materializes with Microsoft. But I did buy the dip on Microsoft and Apple this week. Microsoft in particular, I bought a few more shares of that one just because I don't own nearly as many of them. Now, what's interesting, though, is with Tesla. Tesla has completely broken trend. We talked about how we made a low here, a higher low, but if we talked about this on the show, I think last week, if we broke this level, well, that kind of, all bets are off. Got to take that trend line out of here. Now, conveniently, we're sitting right on our 50-day moving average. I believe this is our 50-day moving average right here in blue. This could be a 200 today. I'm sorry, I don't know it off the top of my head. But either way, it is acting as a little bit of support here, okay? Between 537 and about where the stock is right now at about $600 per share. This is an area where the stock has bounced, okay? During our last correction, this stock was up here in the $800s, $900 range. It retraced all the way down to 540, okay? And we saw this thing retrace all the way back up to 780, only to kind of give it all back. We haven't come all the way back down to 540, but that's where we're at. Now, I've talked about it here on the show. I like to get Tesla swings hot. Tesla's, it's like an emotional teenager, okay? The emotions are going to swing hot and cold, hot and cold. So I am still holding out hope we get a major reversal in this one and we come down here south of 500, south of $500 per share. I definitely would be a buyer here. Like I said, I pre-ordered the Cybertruck. I have a business idea for that. I think I will make money off of it if I can get one in a reasonable amount of time. So I'd rather put my capital probably towards that than Tesla stock unless you get a bigger pullback in Tesla. I absolutely will be a buyer south of 500. Where I would step in, we'll obviously telegraph that and talk about it here on the channel. Hopefully you guys have a great weekend. Again, we've got the weekend stock show coming up tomorrow. I was on Trader Merlin on Wednesday. It was a great discussion that we have. If you didn't see that video, I'll put a link to that in the description below, and you could check that show out. He hosts a live show every day, at 2 p.m. I would suggest you head on over to Trader Merlin's channel as well and hit that subscribe button. Lots of lessons to be learned over there as well. Hopefully you guys have a great week. Bad news is probably no Friday or Saturday show next week. So I apologize in advance, family stuff getting in the way. But after that, barring family vacations and trips to maybe the cabin and things like that, the Friday show should return and should be uploaded much closer to that 2 p.m. Pacific time, whereas now we're closer to 4 Pacific time when these get uploaded. So just wanted to throw that out there. Thanks for tuning in today. We'll be back again soon. Good luck with your investments.